it's important that we become informed about the tax code. Now, what does this have to do with financial planning and financial advising? It means that there's some things that we are encouraged to do. Some of them are for the good of the government, and some of them are for our good, and some are for the good of both. Let's go back to the 401k for a minute. So one of the challenges with the 401k is that you get a deduction when you don't have to pay tax when you put the money in. So you save tax going in, but you're not really saving the tax. What you're really doing is deferring the tax. You're deferring the tax into the future. And I ask a question of my clients. I say, do you think taxes are going to be higher in the future or lower? And the vast majority of people think that they're going to be higher. And you know what the reality is most likely that is entirely what is the circumstance. Because our government needs money. They've printed a lot of money. And in order to pay the banks back, the Federal Reserve that they borrowed the money from, they have to collect more in taxes. And so if they have to collect more in taxes, they've got to find a way to generate more tax revenue. And it's either going to be increased taxes or more incentives. It's interesting, we also ask a question of many of our clients, what is the highest marginal tax bracket that this country has ever had? And most people way underestimate the highest tax bracket. Some will say 40%. Well, right now, today, this is being 2026, the top tax bracket is 37%. And they'll say 40. Well, the actual highest tax bracket that this country has ever had is 94%. Now, for some of you, that will be a stunning revelation. You think that I'm maybe not telling the truth. But the reality is that when governments need money, they raise taxes. If you look at our tax code that was created in 1913, you'll find that the top tax bracket in 1913 was 7%, just 7. And it actually didn't apply to most employees. But 4 or 5 years later, it was over 70%, 1918, 1919. What would cause a country that had just created a tax code in 1913, what would cause them to raise their tax brackets 10 times their tax brackets? What would cause that? Well, if you look at history, you'll see that we were in World War I. Our government needed money, so they increased tax brackets. Now you have to understand that if your tax bracket is 70%, it doesn't mean that if you made $10,000, you had to send in $7,000. What it means is some of your income above a certain level was going to be taxed at different levels, and the highest being 70%. Now that stayed at that level for about 4 years, and then it dropped back down to about 25% and stayed there until 1930. In 1930, the tax brackets shot up again to over 60, and then later, the next couple of years, over 70%. Why did that happen? Well, it's the Great Depression. Our country was going through a rough time, and the country needed money. The government needed money, I should say. So then in 1944, the top marginal tax bracket hit 94%. That meant that some of your income above a certain level, which at that point in time was $5 million. So you would think not that many people in 1944 made $5 million. Well, enough of them made it that they thought, the government thought it was a good idea to try and get some tax from people that were making that kind of money. Unfortunately, they didn't collect enough revenue. And so the next year, they dropped that threshold down significantly. They dropped it from 5 million down to 200,000. Now, that's a big deal. That's a very important thing for people to understand. Again, when governments need money, they change the tax code. So the current tax code that the Trump administration got through is supposed to be, quote, permanent. There is no such thing as a permanent tax code. The next administration can come in and change it. And then the administration after that, and the administration after that. No tax code is permanent. It's permanent for a period of time, and then the new administrations can change it. So we're looking at living into a future that the economic future is different. Things are changing, and our government needs money. It's more than likely that taxes are going to be higher, and tax benefits are going to be, or tax deductions are going to be very, very important in our future. In addition to that, one of the things that we need to talk about is how to create as much tax-exempt income in the future as we possibly can. In other words, income that is never subject to taxation. And there's a whole different discussion that we can have, and we'll do that in another video. where we're talking about how to create tax-exempt income versus tax-free income, or income, for example, a Roth IRA. Even though the income from that, the distributions from that are supposed to be tax-free, under current tax law they are, but you get a 1099. When you receive a distribution from a Roth IRA, you receive a 1099. Now, here's a question. If it's tax-free, why would the government need to give you a 1099? Well, in part, they're trying to keep track of things, but there are some things that have happened in the past that may happen again. For example, Social Security was never supposed to be taxed. Well, unfortunately, today we know that Social Security is included in the tax calculation. If you make more than $32,000 a year as a couple, then your Social Security is taxed. 50% of your Social Security is subject to taxation. If you make more than $44,000 in a year, your 85% of your Social Security is taxable. There's nothing to stop our government from including your distribution from a Roth as taxable income, because one of the provisions of the most recent Tax Act, the Secure Act, is that it brought back it reemphasized the alternative minimum tax. And the alternative minimum tax is something that causes you to you figure your taxes one way, and then you figure it a different way. Whichever calculation gives the most amount or requires the greatest tax to be paid to the government, that's the one you have to use. I don't know if that's going to happen for sure in terms of how they might treat the Roth, but again, I know our country needs money, and as a result of that, they're going to be looking at different ways to extract taxes. When properly designed, there are ways for you to take advantage of the tax code in such a way that your future income, particularly your retirement income, is completely tax exempt. And there's a difference between tax-free and tax-exempt. Tax-exempt does not create a 1099. Tax-exempt never appears on a tax return, and tax-exempt is by law, by definition, not a taxable event in any way, shape, or form, and cannot be included in any type of a calculation. So as we talk to people about how to prepare for the future, about how to move forward in this new economy, or this new economy and the new economic future, and shifting the paradigm, we want to help people understand that there are things that you think to be true about money that simply are not true. And that once you understand that, and then you take a look at what you've been told to do, what you've been encouraged to do. So here's another example of, for example, in the 401k. You put your money in the 401k, and the reason you put it there is to get a match. But there's a couple of problems with that.